Let's get to Philip Chan, Director, Shenyin Wanguo Securities, joining us live from our studios up in Hong Kong. Philip, good to see you again. This transition that Leah was just talking about, what does this, or how has that changed your strategy, if at all?
Not really changed at all. As your previous commentator was saying, these changes have been well known, well broadcast for quite some time, and basically the way things go in China is that there's not going to be too many major changes probably for the first at least the first year that these senior leaders are in office. So if they're coming in 2013, then we don't expect too much change until the year after. As for the provincial side, then of course we do expect there'll be some FAI pickup ahead of the change in the senior leadership.
Okay, and is there a way to play that as an investor?
Well, I think that no. I mean, if people are looking at this as cycles over the last, multiple 5-year cycles, I mean, it's a pattern that's there, and of course, if you're sort of expecting that FAI pickup in the second half of next year, then yes, there's a way to play it. We would be sort of looking at as investors, I mean, we'd be looking at, given that time frame, the cyclical stocks, because there would be, because of this FIA pickup, so cyclical stocks meaning like the property, materials, transportation, that kind of thing.
You know, Philip, 2011 has been a really dreadful year for the equity markets, particularly the Greater China region. I just wonder, whilst we didn't get that Santa Claus rally that everybody was hoping for, I know it sounds rather simplistic, but will we see one at least in the short term for Chinese New Year?
No, the thing is that it's possible you could see it. People sort of keep saying that there's very strong liquidity in the market, and there is. I mean, it's just whether it's is it willing to go back into the equity markets? Is it sitting on the sidelines? I think ahead of the Chinese New Year, there's possibility of a New Year rally. We're taking the view that we're taking quite a sort of dampened view. We think that probably it's better to look past Chinese New Year, but there could be a Chinese New Year rally just because of the, as you say, post-Santa Claus sentiment.
And let's just talk about Europe, because obviously Europe is having an effect on how equities are trading in the Greater China region, and of course the broader economy in China. If we do see conditions worse within the first quarter, how much more downside can we expect in some of these indices?
A lot of it's been priced in already. I think that you could sort of see another 10 or 15% downside if the news is worse than expected. But given that in Europe, I think whilst there's still more to play out in terms of the how the refinancing is going to go, there are sort of like beginning to see some positive signs there. And I think that that's just going to build a base, that's going to help build a positive base to sort of build on a rally. It's not there yet, but anyway, there's some positive signs there. We think that it's more like to pick up in the second quarter.
Phil, before we let you go, very quickly, any risks or any drag from what's happening in North Korea, their leadership transition on China?
There's slight risk, but we don't think there's huge risk. And we don't think that there's, of course, on the economic side, there's no real surprises that are going to happen there. Political, yes, there's some risk, but we don't think it's very big.